Hi, I'm Joe Park, CEO of Horizons Stewardship. Welcome to today's webinar, How to Complete Your PPP Loan Forgiveness Application. Our guest today is a good friend, Stan Reiff. Stan is a CPA and partner at the CapinCrouse accounting firm. He's also ordained clergy who lives out his calling of helping churches and nonprofits more effectively steward the resources that God has entrusted them with. This webinar is a thorough examination of the factors that will influence how you complete your PPP forgiveness application. There are 64 slides. The first 35 are a review of items that have been included in other webinars. So we're going to move through those quickly. So sit back and get comfortable. If you really want to press the easy button right now, you can take down Stan's contact information and engage Stan and CapinCrouse to do your application review prior to you sending it to the lender. The fee for this engagement with Stan is between $500 and $3,500, depending largely on the size of your church, the number of employees you have, and whether they are just reviewing your application or are helping you complete it. So if you're a small church and you're just wanting your application reviewed, it'll be very close to the $500. And if you are a larger church that wants help putting it together, it will be closer to the $3,500. When you contact CapinCrouse, they will send you an information form that you will fill out. And when you do, they will send you back a quote. So Stan, welcome, and let's get right to it.
Joe, thank you again for the opportunity to join you in serving so many churches today. And what an incredible opportunity to just be a part of helping churches seek the loan forgiveness on these grants.
Super. Let's get right on to it. You wanted to bring up that there's another resource I hadn't mentioned earlier.
Absolutely. So I'm really delighted and honored to partner with Ted Batson at our firm. Ted is our professional practice leader over tax, and he's certainly a national spokesperson on the PPP loan process, especially as it relates to not-for-profits and ministries. And so he has just released this white paper. It's about 20-some pages long. That's available if you go to this link that's on the screen. And it's the basis of all this white paper that he has, the research that he has done, that all these slides have been prepared for us today. So again, a great resource. It really is the leading resource for not-for-profits and ministries around the PPP loan, and specifically the loan forgiveness, the application process, and what's considered eligible for forgiveness, and all the nuances for the various calculations that need to be taken, and really condensing down a lot of the various guidance that's come from either the IRS or in particular the SBA, as it has, as we're aware, Joe, it's constantly been changing almost week to week as new pronouncements have come out, as new clarification has come out. And so this is really the summary work from the last several weeks and months.
Excellent. Well, let's get right to it.
Great. Well, Joe, as you mentioned, we have a lot of slides, and my intent is to really try to get through the first 30, 35, 40 slides fairly quickly. But I would be doing a disservice if we didn't at least cover it kind of as a summary of the things we've been talking about the last 6 or 8 weeks now. So as we talk about that, there's a few key things that we want to talk about here. So certainly we will be getting to that application, but there's several things we want to think about first. And so there's a few basics here. Leading into that, I want to make sure I'm also really clear that we're not talking about the accounting treatment for this. We're talking about really the SBA loan application. So if you're a larger church and you actually have financial statements, in the back is kind of almost an appendix to this presentation. We won't cover the slides, but they're there for your benefit, are the various issues that you need to do for accounting for the revenue, the liabilities, and the proper GAAP treatment if you're producing financial statements. So for those of you that actually have either compiled, reviewed, or audited financial statements, there's some really clear information and resources available to you. So again, just in really high bullet point form, there's qualifying expenses that you need to satisfy for this loan forgiveness. And so we're going to really scan through all these very, very quickly. We've already covered them. But again, let me reference, it's in detail, it's in this white paper. And then these notes were taken from that. So we're going to talk about the covered period, payroll costs, non-payroll costs, the timing, percentages that have changed, and then the salary and wage reduction amounts. That's a critical piece that a lot of people are missing right now. And then the FTE reduction quotient and FTE reduction safe harbors. So as we move on to the next slide, payroll costs, we've already talked about those. Again, we've gone beyond the 8 weeks that we were so emphatic about at the beginning. That changed on June 3rd, and now it's a 24-week period. And if you got your loan before June 5th, you have the option of going with the 8 weeks or the 24 weeks. If you got your loan proceeds after the 5th, you've got this 24-week period available to you. Normally, one of the questions always surfaces, if we've spent the money early, can we apply for the loan forgiveness before the 24-week period? And yes, you can, but there's some caveats we want to discuss before you make that decision, because there could be some adverse consequences to you if you've had some of these other issues that we'll deal with in a minute. The covered period, again, before was very, very critical, still is, but the covered period talks about, and if you actually go on to the next slide, that covered period, I think, actually talks a little bit more around, you know, we talked about the 8-week period, when did it start, when did it end, comparing it to January, February, or the prior period, or again, even if you're in a seasonal employer with daycare or summer camps, there are different periods. Those are all addressed in the white paper as well. There's been a big question around the salary, and if you have bonuses and hazard pay, those are now includable, as are vacation, parental pay, and separation payments are all legitimate expenses that can be applied towards the loan forgiveness. Talked about that as well, so we'll keep moving on as we're racing through this at this point. So bonuses and merit increases can be applied for forgiveness. On the next slide, we're going to talk a little bit about some of the benefits. Healthcare is definitely included, and we still don't have a lot of guidance on these few issues of qualified small employer, individual coverage, accepted benefit health reimbursement arrangements, or health savings accounts. We don't have clarity on that yet. So if you, as a church or a ministry, have any of these programs, this is one of those opportunities where you may want to wait if you have any concerns about getting all of your loan forgiven to see if this will help you get there. But with the extended 24-week period now, most churches and organizations will certainly be able to exceed the loan amounts in regular operating and payroll expenses. So this may or may not apply, but we still do not have guidance for those who have been asking. So these are all the payroll costs that we're talking about. Moving on to the next slide, then we talk a little bit about mortgage interest. And again, we've talked about this from day one. Mortgage interest, you've got to have the mortgage in place as of February 15th, and it's not the principal payments, only the interest payments. Certainly if there's been a construction loan in process before February 15th, that's included, as well as company car or office equipment. Rent is also included, again, assuming you had this rent or lease agreement in place before February 15. Same applies for company cars, copiers, and postage lease equipment. Utility payments on the next slide, these are all given approval for loan forgiveness, so make note of that. And then moving on to the next slide, and by the way, Joe, we warned them, didn't we? We're moving fast.
Well, we are. And I want to remind everybody, you're going to be able to download the slides in Giving 365. That link will take you there tomorrow. So you can go back and reference these. We just want to touch on them before we get into the application piece.
Okay, so the next little series here is where we're actually going through and saying, these are the items that will be on the loan application. And so we've already talked about them. There's the details. And again, the white paper really spells out, including case studies for churches on how these affect different organizations with different compensation issues, meaning salaried or hourly, part-time, et cetera. So when we look at this loan application, there's several factors that are involved. So Schedule A, by the way, let me back up. I'm a little bit out of sequence here real quick, but that's okay. What I want to make sure everybody knows early on is there really are two loan application forgiveness available from the SBA. One's called the EZ or the short form. The other is the long form. We're going to spend all of our time today talking about the long form. Here's what you'll need to do is, again, you will submit your application to the lender. I'm going to slow down just a little bit here and highlight this. You may be ready to file for your loan forgiveness, but if your lender does not have their application ready yet, you cannot file yet. But we would highly encourage you, and we're already working with several clients. Many of you on the call have already signed up for our services where we're helping you get ready in advance, have all your documentation ready, and we can actually use the SBA application as a mock application in anticipation of your lender issuing their electronic version. Some of you we've worked with, your bank actually used the SBA loan application to start with. Most likely they will use the loan forgiveness application from the SBA. And so you may want to consider go ahead and applying early or on time as quickly as possible, get that done and get the forgiveness completed. But you do have 10 months after you receive the money to get the application filled, and you don't have to make payments until that time frame. We'll go through all those details in here in just a minute. So again, there's an electronic version. Your lender is who you'll need to apply through, and your lender may have their own, and so you'll need to wait for that. For example, Bank of America has announced they're not ready yet. It will be at least after the first week of August before they have their application ready. There will be several certifications that you'll need to sign off on as well. So moving forward again, on the covered period, we've talked about that. Again, it's moved from originally that 56 day, the 8 week, and it's now 24 weeks, 168 days. And so you have a much longer period of time in that covered period for doing your analysis. And we'll go through the 5 different periods you'll want to do your work on to ensure you're maximizing the full benefit based on your specific church's needs. Moving on to the next slide. Again, and actually I've talked about that I think already as well. Again, the alternative covered period that we talked about a lot before, especially for those who had a bi-weekly payroll, is probably somewhat irrelevant now. And so again, here's we talk about a borrower receiving a PPP loans on Monday, April 20th. Then the first borrow day, that's where it sets up those pay periods and alternative pay periods. Those are some examples. We'll move on. We've covered that several times in the past. We wanted to have a comprehensive view here. The incurred and paid still applies, but because we have a longer period, it makes it easier to satisfy. But incurred and paid means the expense was incurred during the time and it was actually paid during that time. A lot more detail in the white paper to come that is available to you. Moving on to the next slide also. Now we're going to start getting into some examples here. And I'm not going to spend a lot of time because they're also in the white paper, but this is where we start talking about the reduction in payroll costs. So for example, anybody making more than $100,000 a year automatically is capped at that. Those are excluded because the reduction has already been calculated in. But if anybody receives more than a 25% payroll reduction on an individualized basis, you have to calculate the excess of the 35, and that becomes an item that needs to be reduced from the loan forgiveness. There's more information on that in the white paper as well. So let's move on to the next item. And again, here you can see some of the calculations of getting to some of these comparisons, part of that loan forgiveness, and we'll move on. Just again, making sure everybody's aware that white paper has a lot of information. These are some extracts from that white paper. Again, we've talked a little bit about that salary and wage reduction amount. And so we've moved away from annual salaries, and now everything's based on weekly salaries. So trying to get it down to what's those weekly equivalents has become the measurement around all the calculations for these applications. So again, anything greater than 25% reduction in weekly compensation for any of the employees will be a factor in that reduction amount from your loan. These can be offset by increasing the time period. We'll talk about some of these other factors here as we get to the application here in a minute. The next couple of slides actually then also become moving on we talked about that again, just moving forward. The next two slides really are, again, examples of different employees at different levels and which ones actually had that 25% reduction or more, and then how to calculate that. Moving on
and
to
let
the
me
next
let you
slide.
catch your breath for just a
Thank you.
second. I know we're flying through these. We've had a number of people join us since the beginning of the webinar, and just a reminder to folks that have joined us in progress. We're going through very quickly about 30 slides that will be available to you along with the recording and the download. So to get to the actual application process. But there have been a number of changes, and Stan's just doing highlights on that. So if it seems like we're going awfully fast, we are. The slides will be provided to you as a reference point, and there is an article that you can download from CapinCrouse that mirrors what Stan is saying here today, goes into depth in some of the areas that he's not covering in this portion of the webinar. And so all of that will be available. You're going to get a link tomorrow. You can find that in Giving 365. So if you're thinking we're moving a little fast, we're going to slow down when we get to the actual application process.
Thank you, Joe. And so again, absolutely, there's just a lot of background and context that you have to be able to make sure that you get the application completed correctly, because the rules still apply. They've just changed, and so we want to make sure we have a good context as we move forward. The next item that really has created a lot of issues have been around the full-time equivalents, how to calculate that, and if you've had a reduction in the number of full-time employees, or the number of or reducing full-time employees to part-time employees. There are some offsets, if you will, to reduce the loan forgiveness amounts based on these computations. And so really it's critical that you do this work, do your calculations, make sure they're accurate. And there's, again, multiple ways that you're allowed to calculate, and then pick the one that comes to your best benefit. So we'll go through these slides again really quick. You can see the various calculations. You can see some samples that we have here on calculating what does that look like and how does that end up affecting. You can see then the various pay periods that you are required. There's 5 different ones that you look at, that you do your comparisons on, and then you pick the one that's most favorable to your organization. Then the next slide actually then shows how some of the calculations are arrived at. And these are all the things you'll need to do kind of in advance as you're trying to make sure you have the documentation that you need to get ready for your application for the loan forgiveness. The next slide then really starts again looking at that headcount reduction factor and helping you identify really where are you and which number do you want to go with. Certainly, as a reminder, if you end up with any number as circled here greater than 1, you're limited to converting it to a 1. 1.0 is the max number available. And so in this particular case, you would pick that particular period for comparison covered period when you're computing for your full-time equivalent quotient for the loan forgiveness. Again, there's the next slide really starts pointing to some of the safe harbors that are available, and I'm sure we'll have questions coming in for that as well. But number one, we talk about computing your head count. Part of that, you also want to look, the 2 different times, and then there's, there's the various points here that you want to compute. The next slide then talks a little bit about if you've been trying to hire people back and they've not been able to come back, there are some safe harbor provisions so you're not penalized. Number 2, if your church, in particular, if you have any kind of a student camps in the summer, or you have a daycare and you've been prohibited from opening, there are provisions in this that do not penalize the church or the employer for not being able to reopen because of specific guidance from CDC, state governments, any of the regulatory bodies that have restricted the opening of your operations. And so those are really, really crystal clear there. There is, again, the caveat that I want to make sure everybody's reminded of. If you have offered for your employees to come back as a bona fide offer in writing and they have refused to come back, you're required to let the Department of Labor know, or the unemployment office in your jurisdiction know about that, because there are some penalties on both sides of not doing, reporting those issues. Moving on quickly, again, we've talked again, here's some of the examples of some of the organizations who may have had restrictions, either Secretary of Health and Human Services, CDC, OSHA, et cetera, would maybe mandate closure or restriction on who can work and the staffing levels or operational levels. Moving on to the next slide, just as a reminder, if you have an economic injury disaster loan or the EIDL loan where you receive the $10,000, that will be subtracted from that loan forgiveness. Those are not forgiven, but they will be netted against the forgiveness amount and kind of put together. I know there's also been a question that's been asked in the past as we transition on. Currently, the rulings are still that you're only allowed to have one PPP loan. Even though there's more money available and they're trying to encourage others to sign up, you cannot go back for a second loan at this point. This is just a reminder again that if not all of your loan is forgiven, you have an extended period of time. It was 2 years and now it could be 5 years and potentially up to 10, and at 1% interest for not-for-profits. And so, keep that in mind if not all of your loan is forgiven. But there's certainly a lot of ways now with the additional time up to 24 weeks that if you do your calculations right and include a bigger period of time, you should be able to get that loan forgiveness. Moving on, we're finally starting to get to the application. Joe, how are we doing for time?
We're doing great. We're doing great.
Okay, I'm going to slow it down now, and we're going to start going through this application process. Again, just as a reminder for those joining, we spent the first few minutes really summarizing all the changes and all the context, all the background for the loans and the terminology, the processes, and how to then get the application filled out properly, and the kind of supporting documentation calculations you'll need to maximize that loan forgiveness. As everybody's aware, there are 2 different forms that have been released by the SBA, and they're both Form 3508. One is the short form. Think of the 1040 EZ form for those tax filers versus the long form 1040. Well, this is the loan forgiveness application. 3508, the EZ is the short form, and just the 3508 is the long form. Again, you can use these if your lender was using them at the beginning, the complement to this for the loan at the beginning. Most lenders will be using their own electronic format, just like you used when you applied for the loan. Now, here's what we need to, everybody needs to know is, again, certainly it's a simplified form. It summarizes all the information, and then you still have to certify. And then there's a borrower demographic form that is really not applicable for not-for-profits and churches.
So Stan, in regard to the eligibility to use 3508 EZ form, I know the first situation is that you're self-employed, an independent contractor, or a sole proprietor with no employees. That isn't going to apply to most of our churches. I think these next 2 may allow some of our churches with simplified processes to take advantage of. So let's look at these. So the first situation that may apply to your church is where you have not reduced wages of any employee by more than 25%, and you have not reduced the number of average paid employee hours between January 1st, 2020 and the end of the covered period. So there are going to be a lot of churches that have been able to maintain their current staffing that will qualify. The second situation that may apply to many of our churches, allowing them to use the 3508 EZ form, is where you have not reduced employee wages by more than 25% during the covered period, or APCP, and you were unable to operate at the same level of business activity due to compliance regulations from your state or your county or your city or some sort of federal mandate. So Stan, that completes 3508 EZ form. Let's take a look now at the long form, beginning with the core.
There's the core form that has, if you'll recall, the application that you filled out to receive the funds, the grant, the loan. In that process, there was that core information at the beginning, and then you had to certify and either initial or check the boxes that you're certifying these statements to be true. You will also then have a Schedule A where you're computing your payroll costs and reductions, and then there'll also be the FTE portion. So all the things we've talked about and we've been training on for the last few weeks will come to play when you actually fill out that application. The borrower demographic form that is listed on the application does not apply to not-for-profits and churches. So that's optional, but it's not required. So on this particular slide, here's where we start getting into some of the some of the details about the application. Give me just a second to get my brain caught up here. So on this particular certification, and we'll go back and talk about some of the other items, but I want to make sure we're clear on some of the certifications so everybody understands. You're certifying that the dollar amount for which the loan forgiveness is being requested was used for the eligible expenses that we're going to be calculating. It takes into account all the applicable deductions that we've talked about, whether it's a greater than 25% salary reduction, anything above 25% has to be calculated in, as well as the full-time equivalent reduction quotient will need to be factored in. Certainly you want to make sure that all your payroll costs equal to or exceed 60%. And I'm thinking that for most churches, the strategy here to offset all of these is to increase your period of time to ensure that you're maximizing and exceeding the loan amount by having extra weeks in there. So that if indeed, now for some churches, if you didn't have any payroll reductions, if you didn't have any FTE reductions, that makes it very, very simple. So again, coming back to that loan assistance that we're offering, if you don't have any of these contingencies, if you don't have any of these other separate calculations, it becomes a lot more simple to work through. But these are some of the certifications you'll want to make sure that you're certifying that they're accurate and complete. On the next slide, you'll look through and certify in the case if you're an owner, employee, self-employed, you'll be certifying those. And if you're not, that doesn't apply. But certainly we're looking for that everything's calculated on the 24 weeks of 2019 compensation. You'll also be certifying that the federal government may pursue the recovery of loan amounts if it was if you use it fraudulently or in an unauthorized manner. So that should not be a problem. Certainly if we're a church, make sure it's accurate and that you're following the steps that we've already covered. You want to make sure that you're verifying. Again, that Schedule C will be probably the most critical schedule on the application that you'll want to fill out in advance. And again, we'll talk about in a little bit more detail what does that look like. Certainly at the end, you're certifying that all the information is correct in all material respects. And you're also allowing the lender to share the information with SBA and the government and for them to audit and then request additional information to verify that what you have submitted is true and accurate. The Form 3508 also has some additional requirements on the certifications. And that's where they're looking for the applicable deductions from any of the other payroll deductions that may have been applied that we talked about, whether it was from the Family First Cares Act or some of the other payroll reductions, payroll taxes reductions, etc. Some of the Extended Family Leave Act, payroll credits, all those kinds of calculations, if you participate in those, have to be calculated and accounted for. You can offset those by adding additional weeks in. Moving on to the next slide, talking a little bit more about some of the last 4 bullet points on the certification are, again, that you didn't reduce the salaries beyond the amounts, the application of, you didn't reduce the number of employees between that period. And then the safe harbor rules also apply that if you're using those. Here's some of the challenges that we're seeing. I'm sorry, let me go ahead and finish the certification takeaways. Here's, all these are in the article. And then here's the bottom line we want you to understand. The focus is on completeness and accuracy of the application and supporting documentation. Number 2, that any references to fines and civil or criminal fraud charges, you need to understand that's kind of standard language, that indeed if you're doing something that's criminally wrong, you will be prosecuted. But the reality is we don't see that as a major issue within the church as we would hope and pray. And then certainly the SBA reserves the right to review loan eligibility and all the documentation if there's other reasons that surface that cause them to either pause and want more information, or they're looking for some either a mistake or mischaracterization of the facts. Let's talk a little bit about the payroll documentation. Here's something where we get into some of the challenges as well. Most likely, and again, depending on each lender, but most likely they'll want some bank statements and payroll registers from your payroll service to demonstrate that the compensation was actually paid. Depending on the time period of when your loan arrived and the payments that you made, they'll want to look at some 941s. If you're fortunate and it's like a April through June period, that makes it really simple. It's one 941 quarter. If you're crossing quarters, they're going to want to look at more than one. So we'll want to look at that. Income, payroll, and unemployment tax filings with state authorities. They'll want to look at if you have employees in multiple states, which is unless your church is on a state line and you have employees across states, or you have multiple campuses in different states, for most churches, it will be a simple or a single state authority. But if you have multiple states, you'll want to have all that documentation available. Certainly, you'll want to have the documentation for your health insurance premiums, your retirement plan contributions. These are all things we've been talking about for the last several weeks. Have those ready, have them digitized, have them ready to upload. Here's, get into FTE reduction documentation. Again, here's, you'll go through the spreadsheet like we've already presented. There's samples in that article again where you can take and create your own spreadsheet and set up for your employees the average hours over the covered period to reflect that indeed there most likely and hopefully was not any FTE or full-time equivalent reduction, that everybody was working consistently, and if there was a reduction, we'll talk about that. Let me go ahead and insert right here. One of the concerns we do have is if you've had significant FTE reductions, which is the most common thing we're hearing within churches, especially if you had seasonal staff or like a daycare or in the summertime with camps, and you've got a significant reduction, that if you don't restore that and you, and we've got calculations and examples in the white paper, that the difference in the FTE calculation then gets applied for the full 24-week period. And so that, even though you made it up, but you're applying early and you've not made it up yet, but you'll want to wait to apply for the loan forgiveness until you've made up any of those shortages, or you've been able to document it, or you were comfortable with the safe harbor provisions that are available, and document those so you don't end up getting penalized by the difference in the FTE reduction over the 24-week period. That can add up to a large sum amount as we've run the analysis on a, if you've got multiple employees, it could be up to $1,000 per employee per period that we're analyzing, and that ends up being a fairly significant dollar amount. The same applies for the salary reduction. If you do those salary reductions and they've not been restored and you're trying to file early, then some of that will affect your loan forgiveness. And so there's several strategies involved if any of these are true in your organization. Now, what we're finding in most of the churches we're talking to, neither one of these are a significant issue, but they can be offset by extending the time frame that you're applying for. So even though, for example, the loan calculations originally were made on 10 weeks, so it was the 8 weeks plus half a month. So, it was the 10 weeks of payroll, and originally it was 75% had to be on payroll, 25% on operating. Now it's only 60% has to be payroll, but you still have to maximize the full 100% of loan in approved expenditures. You want to over apply for additional above that so that any of these calculations can be offset. So you want to,
That's
before you get,
Stan, that's
go ahead.
a important point. I just want to clarify. So rather than simply stopping at 100, you want to apply for a greater amount than you qualify for in case there are some offsets and such that get picked up by your bank or the SBA.
Correct. And so another way to state that is you want to list expenses greater than the loan amount, so that if there's a miscalculation or if there's something that becomes ineligible due to a clerical issue or a misinterpretation either from the lender or SBA, rather than having to go back and challenge all that, if you apply and demonstrate expenses greater than the loan amount, that will help you make sure you're maximizing that the full loan is then forgiven. So absolutely, Joe, that's a great summary.
So the easiest way for most churches to do this would be to just extend the covered period and let their expenses outweigh. Do you have a percent, 120%? Is there a number that you are recommending?
We don't, because it depends on the size and the complexity of the church and the loan amount. But certainly, it doesn't hurt to add an extra 2 or 3 weeks, 4 weeks of expenses, add an extra month since you can. And again, that's kind of the tension we're all living in right now. Is even if we've gone beyond our initial 8 weeks, for those of us that got funding early in April and May before June, and we've already spent the money, would like to, again, we're at the end of our fiscal year, maybe we're trying to clean up the books. We want to recognize it all as revenue, not as a liability. All those other GAAP accounting treatments that we're not discussing right now, but we could certainly talk about in another session. Those all become issues why a lot of people just want to be done, get forgiven, and have the uncertainty erased. Waiting for the bank becomes the first issue on why we can't hurry up and get it done, unless, again, you have a smaller bank who's using the SBA application, then we can. But certainly there's, we want to make sure that we're maximizing that loan forgiveness. And there's a couple of other pending legislations that may or may not come through. So we want to think about that as well. And so, Joe, if you'll recall, in some of our earlier sessions, we actually were talking, when we first realized there was an extension, we talked about, wow, now that we have more time, we may want to have a different strategy of how we use the funds, because originally it was all about protecting payroll and the employees all the time. Then we realized, okay, we might be able to use those funds over a longer period of time by being a little bit more strategic, since we do have 24 weeks. So those that receive their funding later in May and early June have different strategies that are available to them than those who received the funding in April. And by the time June came around, their options for other strategic decisions were no longer available because the funds have been spent in accordance with the regulations. So there's a few things that play out there. And again, so certainly we all want to have that certainty that it's done, that it's forgiven, and at the point that you have great confidence that you can and will, then you should. But again, there really is no incentive to be at the front of the line and try to beat the rush. My guess is there'll be some tweaks. There's going to be some various glitches in systems. And so if you wait a week, at least a week after your bank has opened up their application, let the first rush get through. You're not paying interest until you've applied for the loan forgiveness and a decision's been made. There's no interest starting. And then even after that, then you've got plenty of time to make the payments if anything is unforgiven at 1% interest. So we would encourage people to slow down the process a little bit, be very methodical, be very disciplined, go through the process. Again, we've talked about, on the both the payroll reduction as well as the FTE reduction calculations. There's multiple periods that you can look at. Take the time to analyze each one of those. It has to be done, it has to be submitted, and then pick the one that is most favorable to your church, to your ministry. And be intentional and deliberate It's better to do that and maximize the forgiveness than it is to hurry up and get it done and make a mistake. So, and then as part of that, making sure that you're indicating an excess of expenditures made above the amount of the loan. Moving back to the slides here, onto the next slide, some of the payroll related, the payroll section will be the most complicated, but it also has the greatest opportunity for making sure that you have the loan forgiveness. So during this period, you can certainly add in your mortgage interest. And again, there's the documentation that will be required: cancel checks, payment receipts, your lender amortization schedule, as well as mortgage statements, any of those documentations. And so again, because you have a longer period, you can submit additional months of these expenditures that are legitimate to demonstrate that you have indeed used the funds appropriately in that covered period. The rent documentation would be very similar: a copy of the current lease agreement, canceled checks that you've made the payments, or the electronic payment confirmations, and then certainly maybe even having a statement from your leaser on the fact that you've actually made these payments. Those are some examples then on those pieces. As far as utilities, again, the same will apply for that, having canceled invoices with the payment documentation of either canceled checks or electronic payment confirmations. These will all be mandatory, so go ahead and start stacking them up. And then, like we talked, maybe Joe, on the very first webinar that we did together, was create that spreadsheet and start making a list, and then adding each one as you go, so that when it's time, and now's the time, start assembling all these and have them in order. Create your tabs, and you can do this as a digital file and upload all the documentation, so it makes it very, very simple, so that when the application comes out, your calculations are complete, you've not been in a hurry, you've not felt rushed, and again, certainly you have another set of eyes looking at the calculations, making sure it's complete, you haven't missed anything, and that you're using the most recent guidance from the SBA, from the interim rules that have been coming out on a regular basis. Again, all this documentation will be required. Certainly the lender's going to require confirmation all this has been submitted, that it's accurate, and that all the documentation's there, and that they are then authorized to submit this to the SBA. Moving on to the next slide. Let's see here. What happens if the loan is not fully forgiven? We get this question regularly. Again, there's three options. The borrower, you can appeal. So again, if there's an error, you think that you're correct and something has been disallowed, there's certainly an appeal process. And you can, and even if the lender denies it, there is an opportunity to appeal directly to the SBA for reconsideration. But the first denial, if any, will probably come from the lender. As a borrower, and this may be true in some cases, may just realize we just can't spend all the money for a variety of reasons, and we won't try to go through those today. But at that point, whatever is unforgiven, you can pay back in full immediately without prepayment penalty or without the interest. So as soon as you find out, hey, we have this amount that we owe back, and you've not been able to get it forgiven, and you're satisfied that indeed you owe it back, then at that point you can actually just issue the payment back. Or number three, you've got this period of time that you can make payments over multiple years at 1% interest, if that is indeed the direction you want to go. On the next slide. So again, here as we start wrapping this up, we're talking specifically again about all the calculations required for applying for the loan forgiveness. We're not really addressing any of the tax implications. We're not talking about any of the GAAP accounting. And as we talked at the very beginning, if you have audited financial statements, if you have reviews or compilation, if you issue any kind of financial statements, formal financial statements, you'll want to make sure you're treating all this with the proper GAAP accounting on an accrual basis of either a liability that you still owe, or it's a kind of that what we would call the PPP grant forgiveness contribution as income. These are all specific things that we can help you with, but they may or may not apply to every church.
Stan, as always, I appreciate the effort you make, how you serve the church as a clergy member doing this work. Anything you want to share before we wrap it up today?
Again, just delighted to partner with you, Joe, and Horizons Stewardship and serving churches. Really is a calling for us. We're delighted to be able to do this together. And thank you to all the listeners and participants for great questions, for joining us week after week to talk about these items, and certainly looking forward to the weeks ahead as we get into our fall seasons and seeing what church looks like this fall, and trying to be prepared financially for that as well. So again, if there's anything we can do to serve you, our number one goal is provide you the information, the content, to be able to fill out these applications, get the loan forgiveness. However, if you're feeling overwhelmed with all the details and the calculations and you want some help, we're prepared to just help do what we call a top level review, or we can, as you've mentioned, we can literally sit down and help you fill out the forms, fill out the schedules, make sure they're right. We've got a variety of templates that we're using, working with churches in particular, to serve them well, so that you can go about the business that you do at your church day in and day out without this anomaly that we're dealing with separately. So thanks again for the opportunity to be a part of this, Joe.
Thank you, everyone. Have a blessed day.